Good evening and a warm welcome to Business Live. I am Emmanuel Apwaji Viafe. Coming up in this edition, Finance Ministry promises measures to ensure that UK's exit from the EU does not impact negatively on the economy. Meanwhile, Ghana's cedi recovers fast against the British pound sterling and the euro after experiencing sustained levels of depreciation before the UK's exit. But analysts says it is a state of volatility. And the EDC Investments Limited, a subsidiary of Ecobank Capital Ghana, has launched an initial public offering for its money market fund. Those were the headlines. You can always catch us live and interact with us on Twitter. We are at Joy Business GH, and on Facebook, our page is Joy Business. You can also get more business news updates on myjoyonline.com/business. We'll be right back with the details.
Business Life Today is brought to you by Ghana Commercial Bank.
In our first story, the Finance Ministry is promising measures to ensure that UK's exit from the EU does not negatively impact on the economy. The assurance follows the record decline in the British pound's value following UK's exit from the economic and political grouping. This has led to fears that Ghana's revenue could decline sharply because of the country's close ties with the UK economy. But speaking to Joy Business after a meeting on improving tax administration in Africa, Mr. Tekpe said it will deploy the same policy measures instituted during the global finance crisis.
Luckily, the city hasn't slided, as much because the trading links continue. We're also on the periphery of what is going on, unlike the emerging, in the EU economies. But every central bank, every minister of finance at this point in time is watching what is going on. But we have the experience of the global financial crisis, and a lot of lessons have been learned, and therefore, as currencies shake, central banks, we had the assurance that, the Bank of England in particular had put contingency measures, apparently had participated in the event, of such a thing happening. And that is accounting for some of the recovery, of the pound sterling. Part of the recovery of the pound sterling is also, part of the problem of the pound sterling also had to do with speculation. There's a lot of speculation, and it's betting around the dollar. So those who bet that UK will stay have lost. So immediately they have to take positions. And so those were part of the initial reaction. But I think that in the medium term, definitely both the EU, the UK, and other countries, would, as the dollar strengthened, and as the euro and the pound sterling started shaking, you saw gold prices begin to go up, and that's because gold is a haven commodity, what we call a haven. It forms part of the reserves of central banks, in addition to the dollar. And so gold prices tend to also move with the strength of the dollar, in particular the euro, and the pound sterling. And so these are some of the two effects. Obviously, the other effects are, in the medium term, what happens? Is a question. What happens in the medium term? Does UK go on its own, or does it enter into a Norway or other countries, Switzerland, which have special relationship with the EU?
Meanwhile, the pound is currently trading at 5 cedis 40 pesos from 5 cedis 88 pesos on the interbank market. The cedi, prior to the last Friday's performance, had suffered sustained depreciation against the pound at both the interbank and Forex Bureau markets. Currently, currency and investment analyst Samson Akligo, speaking earlier on the marketplace, stated that the cedi is only responding to current development and that what is happening now is a state of volatility which will settle with time.
Lying factor is the volatility mainly in the international market, and the fact that the Brexit decision part of uncertainty. I think really is what we are witnessing is volatility, and it reflects the fact that people are uncertain and people are unsure, and it will take some time for the market to settle. So yes, you've seen the cedi actually increasing to as much as 5.78% on interbank market, Bank of Ghana rate, and of course today we've seen it around an average of 5.1, which is quite sharp. Yeah. And I think that we should. It's very clear that the market, especially the efficient markets across the world, are not sure what the outcome or the final outcome of the decision will be and the impact that it will have on the UK economy. And I also think that another key thing is, again, in terms of leadership, a lot has been done to calm the markets, and until the markets get a clear signal, we will be seeing this volatility. This is really more a global phenomenon than a local development. So the cedi is responding to developments in the global market, especially what investors are doing with respect to the decision of the UK government to leave, and Ghana is being affected by that. Certainly, if it is seen as something that is going to be persistent and influence our terms of trade, we will see some action from our side. And I think the main thing that we need to do and watch is that, one, how do we keep cedi assets attractive, which I mentioned yesterday. It's very important for Ghana. And in the long term, too, we must be, what do we put in place to ensure that our terms of trade position remains competitive.
And in another development, reports say the UK has lost its top AAA credit rating from ratings agency S&P following the country's Brexit vote. S&P said the referendum result could lead to a deterioration of the UK economy's performance, including its large financial services sector. Rival agency Fitch lowered its rating from AA positive to AA, forecasting an abrupt slowdown in growth in the short term. Investment analyst Samson Aklego, however, says these downgrades could impact Ghana's economy over the medium to long term.
The frontier markets like Ghana and the mature markets, what investors generally do is that they pick yields in markets like ours. So, of course, if the UK credit environment is downgraded and the investors are looking at that and they are looking at our market, I think immediately the response is that it is to our advantage, unless, of course, that triggers the fact that the UK would want to raise interest rates, and then, of course, that means that it will affect us. But I think the whole Brexit thing, for now, is creating sincerely a lot of anxiety, and until we see the market settle, it will be difficult to really talk about the path that a lot of countries like Ghana would take. Of course, from the side of the UK, they have to respond quickly. They have to give confidence. The central bank needs to assure the market, and of course, even make funds available. I think fundamentally there are two things. Short term is currency. Over the medium term, we must, if really the British pound gets weaker, what we're going to see is that on the import side, the British will be better off, and of course from the export side will be worse off, and those adjustments would have to take place in the economy.
Away from the financials, operations at the revamped Ayesu Starch Factory have ground to a halt after the Electricity Company of Ghana, ECG, cut power supply to the company. The factory is one of the major businesses affected by the ongoing disconnection of defaulting customers by the ECG in the central region. Our regional correspondent Richard Kojo-Nyako joins us live on the line with some details. Good evening, Richard.
Good evening.
Now, how bad is the impact of this exercise on the Ayesu Starch Factory?
The impact is very huge, considering the fact that it was recently revamped and work was progressing speedily there. The workers were happy, and residents around the area were also very happy that at long last the factory has been revamped. Now, yesterday was that major turn of events has saddened the people and the residents there, as well as the workers, because now the factory has come to a halt. The operations have been halted because the Electricity Company of Ghana says that they owe them huge sums of money and they need to settle their indebtedness before they restore power to them. And so there is nothing going on there unless that they resort to alternative use of power other than electricity. Then it means that they have to depend on the genset for them to be able to work very hard. And so that's really the situation on the ground.
All right. Now, Richard, which other businesses have been affected and how serious is it?
Well, other businesses we can talk about the Cape Coast Polytechnic, where they were also disconnected yesterday. That place is education and the technical department people, so other people also engage in other teaching activities. And so as the power has been disconnected, it has affected them a great deal. The marketing and the traders around there have also been affected because the students are also writing exams and they are sitting in darkness. And so today they've been appealing to the authorities, the government, to help pay the money that is so that they can really connect them to the electricity.
All right, thank you very much, Richard Kojo Nyarko. We'll come to you again whenever we need more information. That was Richard Kojo Nyarko, our Central Regional Correspondent. Now, Investments Limited, EDC Investments Limited, a subsidiary of EcoBank Capital Ghana, has launched an initial public offering for its money market fund. The new product allows investors to meet short-term financial demands by allowing managers to invest bonds, treasury bills, and other money market securities. Darryl Kwao has more.
The objective of the fund, according to managers, is to maximize incomes in line with prevailing Ghanaian money market rates while aiming to preserve capital and to maintain a high degree of liquidity. The fund will invest in a broadly diversified portfolio of short-term, high-quality money market securities. Kesey Antonio is Managing Director of EDC Investments.
With a money market fund, we invest only in instruments with a tenor of less than 12 months. So the money market fund is more of a liquidity management tool. You have money, but you'll be needing liquidity in the short term, but you don't want it sitting idle in a bank account. You don't want to lock it up in money in an instrument, maybe for instance treasury bills, for 3 months when you don't know. You might possibly need it in 2 months, but because of that, you don't want to invest in anything because you'll be needing the money soon. But with the EDC money market fund, it gives you the option to come in, get some returns and invest at any time you want without any penalties for redeeming. Because, with other instruments, you get a penalty for investing, for pulling out before the tenor of the investment. Okay, so and there's no front load as well. We don't charge anyone for entering the fund, so you can come in and exit at any time you like.
The IPO period runs till July 18, 2016. So who qualifies to subscribe for the IPO and how much does one need to participate?
Well, for individuals, it's just 100 cedis. For corporates, 50,000 minimum. Now, the thing is that for individuals, you can subsequently top up with 50 cedis minimum, and for corporates, 10,000 for subsequent investments.
Is it open to everyone?
It's open to everyone. It's open-ended. When I talk about it being open-ended, that means it's going to exist into perpetuity unless the trustees and the unit holders, for one reason or the other, want the fund wound down. And once that is done, monies will be distributed to unit holders.
The EDC Money Market Fund is the most recent collective investment scheme that EcoBank's asset management business has launched in Africa, with assets under management in these schemes amounting to $310 million. In Ghana, two of these schemes, the EDC Ghana Balance Fund and the EDC Ghana Fixed Income Fund, have a combined net asset value of 135 million cedis.
Now, a senior research fellow of the Bureau of Integrated Rural Development is optimistic Ghana's poultry industry will soon experience a major improvement following a donor support from the U.S. government. The challenges in the poultry industry has been attributed to lack of funds and mainly importation of frozen chicken, among others. The $57 million support, according to Dr. Paul Safo-Mensah, will introduce feed improvement and efficiency into the layers industry and the Ghana poultry projects.
The crippling competition from other poultry-producing countries compels Ghana to import large amounts of chicken to feed its market. The intervention is aimed at enhancing the poultry industry and improve food security in Ghana. The 5-year project would ensure that poultry farmers are comfortable with their business. At the launch of the FFPR Ghana Poultry Baseline Survey in Kumasi, Dr. Paul Safo-Mensah said the project will largely consist of poultry population-based measurement of statistically significant changes to expand trade of agricultural products.
We realize that much of the poultry that we consume in the country is imported. Of course, that which is imported is cheaper than what we produce here, but that is also not good for the economy. The poultry industry, if it collapses, the people who are associated with it, the industry don't have jobs to do. So this intervention is very useful and is right on time, that at least as part of the government agenda of creating jobs and also sustaining agriculture and food security. This is a very timely project.
What are the levels of the interventions here?
The levels of intervention are twofold. One is targeted at what they call the Ghana Poultry Project. And the other one is a long name called Amplify. But that one is targeted at the layer industry to infuse efficiency into the layer industry, the one that they call the Amplify. So these are the two interventions that is coming under this $57 million.
It will be conducted in some selected districts in the Ashanti, Brong-Ahafo and Greater Accra regions. The Ghana Statistical Service is collaborating to ensure proper survey results.
In the sense that they didn't work in isolation. They collaborated with Ghana Statistical Service, which is the institution mandated to carry out nationwide surveys, censuses, and therefore we always ensure that the standards and methods are followed. And I mentioned that UN has advised all national statistical offices to ensure that they collaborate with researchers and other MDAs to ensure that they agree with the National Statistics Office so far as the methodology of the survey is concerned, so that we are able to standardize it, as well as the definitions and concepts, the terms that we use. We should have the same meaning. The responses that we use in various surveys should have the same responses, so that in future one can easily compare results from one survey to the other.
It's still live on Business Live. We're taking a short break here. More coming up. Don't go away. Welcome back to Business Live. Now, the pound sterling is racing fast against the cedi on the market, and John has joined me here to tell us what's going on the currency market. John, cedi chasing pound sterling or otherwise?
Exactly, whichever way, I think is the same thing. One is either losing value to the other, or one is appreciating against the other. But in this particular respect, the news is that the cedi, from January, the cedi has not really done well against the British pound.
Yeah,
but
sure.
More importantly, between the beginning of this month till the end, the cedi against the dollar, against the British pound, has lost almost about 18% in terms of value. But all of a sudden, just after Brexit, the cedi, fortunately, so it had a turnaround. We call it, it rallied against the British pound. Really.
So what could be the reason?
It's simple. These are indirect implications of Brexit, meaning Britain actually deciding to leave the European Union, heightening that tension of uncertainty and volatility, as we call it, across Europe and in England in particular. That's exactly what it is. So investors don't have confidence in the British pound anymore, and aside, they are looking for other alternative of actually storing the value of their currencies and their investment.
Now, why the pound sterling? Because I know that most of our businesses is done with the dollar or is denominated in the dollar.
Exactly,
so why the pound sterling?
The pound sterling is equally important because Ghana deals in the dollar, the pound, the euro, and the Chinese yuan, basically. So these are the major trading currencies here in Ghana. The pound is equally significant in our trade relationship, and whatever happens to the pound affects the cedi as well, whichever way it goes. Whether if it's positive, then it affects the cedi. If it's negative, it does also have some implications on the cedi. So the decision of investors, stockbrokers, investment bankers, and all to sort of like not to have confidence and to have alternative investment platform actually has had that effect or impact on the Ghana cedi. Basically, that's exactly what it is.
Right. So is it also having an impact on commodities?
Naturally so. Commodities are investment. That's what we call them a market. You understand? It's a mechanism which we use to determine values, your wealth, and all. So these are quite interrelated institutions and network. So whatever happens to it, one happens to the other. For example, cocoa over a period of time has been losing value, but just after Brexit, the depreciation of the value of cocoa deepened. Okay. 1, 2, crude, as a result of Brexit, because of that uncertainty in the Eurozone, also began to lose value. Because you can tell from last 2 months, the crude oil has actually sort of gathered some momentum and began to recover itself over the period. Okay, right. So because of Brexit, a lot of uncertainty hit the market, and because of that tendency that the British economy will sort of like will slow down and growth would also contract, crude oil price began to actually go down.
Tell me, exactly why has gold suddenly also become so important? It's appreciating fast.
The answer is simple, obvious. Gold has always been an alternative investment source for every investor across the globe. Okay, so what is happening is that if I'm actually pulling my investment out of the British pound, if I'm pulling my investment from oil and gas, if I'm pulling my investment from cocoa, what is the next safe alternative? It is gold. That's what we call it, store of value. So they put it in there. It's a temporary measure. They put it in there until the British economy and the European economy recovers. Then they decide where to actually turn into. So if it takes about a year, 2 years, 5 months, then gold will still see that particular rise in prices. That's exactly what it is.
So what are we seeing on the table? I mean, what are the figures saying?
Basically, it's simply a reflection of what is happening on the international market to do with the crude oil. It's beginning to recover itself just after yesterday. But crude lost almost about $4 per barrel between Friday and yesterday. It's just this afternoon that crude has actually gained some 63 cents to be trading around $47.80 per barrel. Look at gold. Because crude is gaining, previously gold has been gaining. Because crude is gaining, there is a corresponding reduction in gold prices here. Okay, Emmanuel, so if you're following, that's exactly what it is. This tells you that there is this symbiotic relationship between the price of crude oil and gold, and equally, cocoa also is beginning to gain some value. This crude oil and cocoa between Friday and yesterday, Monday, lost value as a result of that uncertainty in the Eurozone. But because gradually they are finding the level, because we are hearing that the British Parliament is also going to vote on Brexit as to whether to sign it or not, because they have about 2-year window period to really make that final decision. And within that, that period, everything is actually happening. So the market over a period of time would have to actually find its own level. That is exactly what this is saying, because crude oil is actually gaining almost about 63 cents and cocoa is gaining 16. These are indications that these markets are interrelated. Whatever happens to these also do happen to Ghana and across the continent at large, Emmanuel.
All right. Okay, thank you very much for that analysis.
You're welcome, Emma.
It's been very on point today. All right, thank you very much. And importation of seeds could be a good business venture for potential agric investors. That is the indication by Vice President of the Federation of Association of Ghanaian Exporters, Marjorie Abdeen. Concerns have been raised about the availability of seeds, thereby affecting Ghana's vegetable sector. A recent report by vegetable support organization Ghana Veg revealed an overdependence on the few older variety of seeds currently, and as opposed to the new domestic and international varieties on the market. Mrs. Abdeen says the market for import seed is big. That will be on Interview for the Day today.
Interview of the day is brought to you by
EcoBank, the Pan-African Bank.
Not really proposing getting a subsidy on seeds, but the availability of seeds is a challenge. You get an order, you identify the seeds that will give you the variety you're looking for, and you go back to buy more seeds. They'll tell you, oh, it's not available, or it's coming, and nobody seems to know when the seeds are coming. We can't operate like that. I think it's a good business opportunity for anybody who is interested in making money to set themselves up as importers and wholesalers and retailers of good quality seeds. But of course, they have to look at the market. What does the market demand? And then go that way to order the seeds.
Interview of the day.
And this is where time will permit us on the show Business Live for today. You can always get interactive with us by tweeting. The handle is @JoyBusinessGH. And on Facebook, our page is Joy Business. You can also get more news updates of business, of course, on myjoyonline.com/business. Thank you very much for your attention, and do join me again, same time tomorrow. My name is Emmanuel Abuaji. Good evening. Up next, Focus